The month of May is coming close to an end, and let's take a look at how the Nifty and the rest of the sectors played out last week, and based on that, how can we position ourselves for the week ahead. Well, I have my usual dual screen over here. On the left, as dual charts, on the left the weekly and on the right the daily. And I'm using my usual Heiken-Ashi with my next price indicators and the next RSI, essentially a play of direction and the momentum with a dash of divergences. Starting with the left-hand side, the Nifty futures chart looks pretty well poised from the weekly point of view. Heikens, bullish Heikens, super trend, slope of the EMA, RSI, EMA, everything looks pretty well established on the upside. Yes, it's hovering at a 50% retracement of the previous erstwhile correction. So probably that's why it's facing a little bit of resistance here, close to that psychological 25K mark. Take a look at the daily time frame, and it did come off. This is Heiken-Ashi closing prices, mind you. It did come off for the last almost 4 trading session, and then on Friday it managed a decent bounce back. The momentum, however, is slipping. We did have a breakout. You remember that? I did talk about this breakout may act as support, and as of now it seems like, all right, the market is trying to get some support from the previous resistances. Big question, what can we expect going forward? Number one, always respect the higher time frames. So it makes sense to stay predominantly bullish. You should look out for sectors which are bullish, and within those sectors, stocks that can make that move on the upside. That should be your priority. If you're into the derivatives and you also do, short trades and all, then you may look out for sectors which are relatively weaker. We will open the RRG graphs and try and figure that out. But predominantly, the market as of now, what we see is predominantly bullish. Is there any bearish readings? Is there anything? Well, if I zoom into the daily time frame of the Nifty futures, there is a minor, just an early sign of bearishness, which is I have a proper bearish Heiken-Ashi, and that has led to the super trend reversal, followed by a bounce back, and we like to call them the HHGB. The EMA of the RSI has started to drop a little bit, so there are a little bit of signs of momentum slowdown. But the momentum slowdown, will it lead to directional, correction? For that, we need to see the market slip below Friday's low, preferably Thursday's low, and that's close to that 24,600 mark. And that is your immediate short-term support. That is your immediate short-term breakdown point. If you're looking for any kind of weakness, it has to come sub 24,600 Nifty futures. On the upside, we have an HAGB, but that's not enough. We have a bearish Heiken, so Heiken is not supportive. The only supportive thing is the higher time frame and the fact that the EMA is still looking pretty good. So we would like to take it on the upside step by step. That is a move above Friday's high, a move above that previous swing fractal high. And yeah, if that plays out, of course, the rest of the sectors and stocks will play out on the upside. So I would say 60-40, keep a 60% bullish view and a 40% bearish view. If you're a long only trader, you don't have much problem. But if you are looking to short the market as well, then try for shorts only sub below Friday's low. Right? So with that in mind, can we quickly do a sectoral analysis, and we'll also pull up the RRG graphs and try and figure out. I'm to a lot of extent, I'm discounting this high. I want to focus more on this, low. And from that point, if we drag and find out how many weeks have passed, we'll see around 11 weeks, 11 bars, so around 11 to 12 weeks have passed. So let's come to RRG graphs. Let's go for Nifty 500, 11 or 12 weeks, it's okay, on the weekly time frame. And let's see how are the RRG graphs playing out. I'm going to take out the sectors which I do not track that closely, like a CPAC, PAC, and I'm going to stick to the core main sectoral charts. Media is something I'm not that keen, and all these 250, 100, 50, 400, I'm taking them off the list. It will be shorter and easier for us to make sense. And I think that's more or less it. Sorted in terms of percentage change, and from an 11-week point of view, you have the PSU bank, the private bank, the bank nifty. So clearly the financials have been playing out when it comes to percentage gains, and they are all in the leading quadrant. So come on, let's take a look at them. If you take a look at the Nifty bank, that's where it is. It's losing vertical distance. It's losing momentum of relative strength. If you take a look at private bank essentially mirrors the bank nifty, or it's a private bank that leads to the change in the bank nifty, and that's also behaving exactly the same. So if I add up the bank nifty and the private bank, we clearly can figure out that an erstwhile leading sector, relatively outperforming sector, is now slowing down. It may or may not be correcting. Let's quickly take a look at the PSU bank, and the PSU bank seems to be a little different. Though in the leading quadrant, but it's angling up. Though in the leading quadrant, the bank nifty and the private banks are over here, and the PSU bank is way to the left, which means it does not have that much relative strength which the private banks enjoyed. Before we take a look at the price charts of the bank nifty, private bank and PSU bank, what the RRG graph over makes sense is bank nifty, thanks to the private bank, were the erstwhile strong sectors, and right now they might be going through some momentum slowdown. On the other hand, PSU bank does not have that kind of relative strength, and it's just picking up. It's probably is trying to do a catch-up game. So with that in mind, can we go to the actual sectoral charts? And first, let's take a look at bank nifty. Now, both of us know that the CNX Finance and the bank nifty were the first sectors which hit an all-time high. Remember, it was just four weeks back. And since then, what we can see on our charts is essentially a consolidation. It's taken the shape of a triangular consolidation, a symmetrical triangle, ascending triangle, whatever you call it. But there's no doubt that this is a consolidation, a range-bound activity. Wherein the momentum has dropped, the trend has not dropped completely. And for any kind of upsides, you need this breakout. Period. There is no second thought about it. View cautiously bullish. Now I'm adding the word cautiously because the trend is positive, the momentum is not. Higher time frame is very well placed, positioned. So ideally, if everything stays more or less like this, the current market conditions, we should get a 55,600, 700 kind of a breakout from the bank nifty. And for that to happen, the private banks should catch up because the private bank is essentially very, very similar to the bank nifty. The only thing is, if I zoom into the private bank, I notice a short setup. The momentum is negative, the bearish Heiken followed by an HAGB, which means that for Monday, Tuesday, for the next couple of trading session, your Friday's low is supremely important for the private banks, which in turn makes it supremely important for the bank nifty. The private bank and the bank nifty have closed really well on Friday's trade, really well, the good close. But for some reason, if it slips on Monday, and for some reason, if it slips below Friday's low, things will lead to a downward breakout. Structurally well placed for the breakout, but short-term weakness needs to be seen whether it opens up on the downside or do we get a breakout. Majority of the readings are suggesting an upside breakout. That's how we should position ourselves, keeping in mind the other side of the story. Let's see how it unfolds. With this in mind, if we now take a look at the PSU bank, the CNX PSU banking index, you will notice that it is way far away from its respective life high. The bank nifty hit a life high, the private banks hit a life high. We'll take a look at CNX Finance. That's also did hit a life high. But this guy is trying to do a catch-up game. All right, welcome. But what are your elementary readings? Predominantly positive on the weekly, no problem. Predominantly positive on a daily, no problem. back to those previous highs. So there you go. 6,800 kind of a CNX PSU banking breakout you should be looking out for. Good thing is what we saw in Nifty Private Bank, some signs of weakness, it's not there in the PSU bank. So I'll just add CNX Finance and then I'll complete my so statement. CNX Finance also more or less is similar to what we saw in Bank Nifty. Strong weekly charts, slowdown in the daily time frame, trend is more or less intact, momentum is slowing down. It's essentially make or break. Is that okay? This is an important pocket of the market. The financials, the banks enjoys almost 40% weightage. And so you should keep them in your long list. You should keep them in your bullish list. If the Nifty gives you a breakout, it's very likely that the gains from the Nifty should ideally come from this particular pocket. So that's one pocket you should keep under your long category, bullish category. Let's go back to the RRG graphs and let's see what else is there in the leading quadrant. We have oil and gas, which is energy. And then you have, I'm going to take out commodities, then you have FMCG. Oil and gas, I clearly remember, it's one of the good looking RRG graphs because it's traveling left to right. And it's dipping a little bit down. That's not great. But the good thing is it's left to right, which means it's enjoying relative strength. It's in the leading quadrant. This should be under your long category. You should be looking out for breakouts within this pack. Oil and gas, energy, if you take a look at the CNX energy index, you will see a pretty good looking, not a problem. Weekly chart, it is essentially retracing the fall just like the Nifty. The daily chart is giving you a pullback. We like to call this pullback a thunder pullback. So CNX energy, very well established bullish chart. So banks, financials, and now you add energy. What we're trying to do is create a list of sectors which still looks bullish. If the market goes up, I'm going to look for longs here, and we're going to probably get a short list. If the market fails and breaks, we should be looking to short that pocket. So energy is fine over there. We also did see that FMCG is there in the leading quadrant, and it's been doing a lot of drama. Though it's in the leading quadrant, it's very close to the central point, and it's kind of dropping. It's not a very good sign of strength, at least in RRG language. But in terms of price, can we take a look at the CNX FMCG? And yes, you can see how choppy and range bound it has been for the last 4 to 5 weeks. Structure fine, momentum fine, HAGB on the weekly time frame. We need that breakout. Again, like the Bank Nifty, like the financials, you need this breakout. But if you remember what I discussed with you in the private Nifty private bank chart, same thing holds with the FMCG. We have very early signs of trend reversal, momentum is down, and a pullback. So this falls again in the same category as private bank, make or break. So Friday's low for the private bank, Friday's low therefore for the Bank Nifty, and Friday's low for CNX FMCG opens up downsides. We just have to be prepared. We're not saying that it will break. If it breaks, these are the sectors which may weaken. All right, let's now go and let's go clockwise. Let's take a look at who's there in the weakening. Financial services is in the weakening because it's just dipped below it. It's more or less the same logic like what we discussed. And we have the Nifty metal. Nifty metal from recent past of being strong, losing momentum, and now falling, going right to left and up to down is a sign of weakness. In terms of RRG language, if you are a derivatives trader, Nifty metals, you should be looking to short. If you're a long only trader, stay away. This is what it means. So, is the price telling us the same thing? Well, no, actually, to be honest. If you take a look at the weekly time frame, you will see a strong Heikin-Ashi trend, momentum looks fine. If you take a look at a daily time frame, it's more or less gone into a 2-3 day kind of a range. Now it's waiting for that breakout. It might be a little tired. So are there signs of weakness to short? No. Are there signs of momentum slowdown? Yes. Is this a bullish chart or a bearish chart? It's a predominantly bullish chart. So the price behavior and the RRG behavior do not fit in that well. What I can make sense out of it is, because the RRG is weakening, because the price is at resistance, because it's slowing down, I would say don't chase longs from this pocket. Just wait a little bit. Right? That's the weakening. Come to the next one, which is the lagging, is the consumer durables. Healthcare, pharma, IT. Now, healthcare and pharma will have many overlapping names. And what you see over here is movement from the right to the left and from the top to little bit bottom. This is again a sign of clear weakness. Just like what we read in metals. You should be looking for shorting opportunities if you're in the derivatives, or if you're long only trader, stay away. So with that, let's see, is the pharma chart giving us similar kind of a reading? Well, the weekly is trying to improve, not great, okay, very okay. Very clear signs of levels, very clear signs of levels over here which can give you that breakout. If I zoom in closely and take a look at the last couple of days price behavior, Heiken has gone bearish, momentum is just slipping. Again, just like FMCG, just like private banks, maybe, just a maybe. And so keep an eye on Friday's low. So on Monday, Tuesday, if you see pharma breaking Friday's low, or FMCG breaking Friday's low, or private bank breaking Friday's low, those signs, those breakdowns will be signs of further weakness. So if I add the RRG graph reading and the price reading, yes, it's adding up a little bit. What RRG is telling us and what price is showing us, it's adding up a little bit better than metals. But again, make or break over there. You have the IT and the consumer durables. Now, IT is like a huge underperformer and is just picking up momentum of relative strength. With that in mind, if we go to the CNX IT, you will see a pretty sharp revival, bounce back, and currently slowing down. And IT, I would again say, same thing, Friday's low or the previous breakout point. Because of this formation of Heiken-Ashi, super trend and pullback, Friday's low for IT will be again important. So remember, I'll repeat again, IT, FMCG, pharma, private banks. Okay, these are the four where Friday's low will play an important role, especially in the next couple of trading sessions, Monday and Tuesday. And then consumer durables. Consumer durables is gaining momentum of relative strength, but it's in the weakening, in the lagging, not weakening, the lagging quadrant. With that, can we take a look at the consumer durables, how it's playing out? Interesting. Interesting because the first thing that should strike you is this, the polarity. The second thing is, well, the super trend has turned down. The Heiken has gone bearish. I call this a decoy bar. I'm not going to go detail into it, but there are signs of momentum, slowdown, weakness, short-term weakness can lead to further downside. Higher time frame is dealing with important level, may act as a resistance. If the markets fail to hold, this guy can come down. Consumer durables chart is showing signs of mild weakness. Consumer durables RRG is in the lagging quadrant. This makes sense. This can be a pocket of weakness. And last, the improving quadrant, you have the auto, you have the energy, which we have discussed, energy and oil and gas and all, and then you have realty. Realty looks impressive because it has gained relative strength. It has gained momentum of relative strength and it's gone to the improving quadrant. If we take a look at the CNX Realty Index, let's take a look at the weekly time frame. Pretty good looking bounce back. It also we have to keep in mind this particular zone. It's a pretty wide zone, but it has relevance in the past, pretty decent relevance in the past. So we have to keep this in mind. Entering supply zone, pretty much stretched, bodies of Heiken shrinking, stay away. Don't chase longs here, please. Just like the metals. Can we short? No, there are no signs of such weakness. We saw that in consumer durables. It's not there in reality. So reality and metals, I would suggest to stay away. Finishing this video off with the Nifty Auto. Autos being hovering between, it's not hovering, it's been kind of seesaw between the improving, lagging. And now it's just bouncing back towards the improving quadrant. Let's take a look at how the charts of CNX Auto looks like. I have a zone plotted, makes sense. At that level, it has just started to slow down. A bit of a correction, nothing much. Heiken's gone negative, nothing on the super trend, nothing significant. I have a positive continuation divergence. I would suggest stay away. They are not enough rational to go short or call for a downside move. And the previous bullishness bounce back seems to be tired. So wouldn't make sense to chase, just like what we discussed in reality, just like what we discussed in metals. So I would suggest auto, metals, reality, stay away. You have few sectors from a bullish point of view, few sector from a bearish point of view. The bearishness only gets triggered if those sectors break Friday's low, especially the very next day, that's Monday or Tuesday, within the next 2 days. If the markets hold above Friday's high, then we will find more confidence, more optimistic view on the overall market. Right? So there you are. That's my take on the Nifty and the rest of the sectors this week. I hope these videos help you to figure out how you should strategize. Do let me know. You can share your comments, and for the next week, trade well, everyone.